This was in 2008 when the crisis hit. There was a big concerted effort in terms of your fixed cost base. As a business, we've got our variable costs, which are related to our assets under management, and then the fixed costs. Now, your variable, you obviously can't control, and it's not something you really focus on because it's going to take care of itself. The fixed costs, specifically staff costs, to a large degree, your marketing and your IT, which are big expenses, that's the area you really need to concentrate on a lot. So having a budget where you are monitoring those costs very specifically was extremely important, because you really didn't know what was going to happen the next day. You know, a lot of people, you find you do your budget, and at the end of the year you look to see how you did. So there's, and also people will put a budget in this. Okay, we're going to spend 120,000 rand, so that's 10,000 rand, easy, done and dusted. Put the budget, divide by 12. Here we had very specific criteria, especially on a marketing point of view. Now, marketing is always a very important aspect, or so the marketing guys tell us, but the spend it's not a smooth process, especially when you making adverts, or you've got a campaign, or you've got some big marketing drive happening. They happen at different times of the year. So they would itemize their budgets down to a lot of detail, and it'll be on a monthly basis, so we can see from a cash flow perspective as well, what's coming up. We've got a big retainer to pay, we've got a deposit on an advert, something along those lines. So from a cash flow perspective as well, to probably monitor that was incredibly important and very useful as well. Previously, when we did the budgets, people would put all the information in, and then we would have to get it into our reporting format that we had, and that was painful, to say the least. And then with analytics, what we're able to is, in the actual package now, is map categories and areas the way we want it, and map it exactly the way as our management accounts were. So literally, no matter how many new accounts come through, it doesn't matter, because as long as that that heading is mapped in analytics and comes through, it's fine. So literally, you do a 40-line export into Excel, that you can use. So that makes a hell of a lot of difference to the time. I mean, saving probably days on end and pain. Quarterly, we send out the budget variance reports, and managers will actually have a look at it. And then, so we had a question the other day from the investment team about their travel. He thought the international travel was looking a bit higher. In the general ledger accounts, which I don't normally go trawling around in, but it's made up of 15 to 20 different accounts for the international travel for them. So it would be a case of literally going to every account and seeing, which isn't fun, a nightmare, and it would take me probably an hour to get back to them. Whereas in analytics, I had the model open, literally just go to the investment team, international travel, go to the transactional level, and it's got all 15 accounts, every transaction that's in those accounts. And just from there, I can just on the screen read it and say, okay, so-and-so traveled here, so-and-so traveled here. And then you can say, okay, yes, that must be moved, reallocate that. And I mean, literally less than 5 minutes, queries done and dusted.